What's going on, guys? This is Cameron, aka the Currency Kid. Today, I wanted to I'm thinking about a two-part series here, just some basics on ICO investing. A lot of people are interested in ICO investing and don't really know where to start besides watching reviews. However, a lot of reviews go over different terms that a lot of people aren't really familiar with. I know myself when I first started watching videos, hearing terms like hard cap and hearing guys like Ian and Bellina say, I'll never, or I won't invest in this project because it doesn't have a hard cap, and me just being completely clueless on what that means. So, for this video, I'm just going to go over some basic terminology you need to know and that you will hear when you're looking at investing in ICOs. And then I'm pretty sure I'm going to do a follow-up video with a little bit more in-depth conversation on this, and then a little bit more on what you should look for as an ICO investor. So I got a lot of terms here. I'm going to go over them. I'm probably missing some. There's probably a couple more that are important that aren't mentioned in here, but I feel like this is a pretty good start. And in the notes here on the video, I'll include a couple links, not only to give credit to where I got these definitions, but also to let you do a little bit of your own research and give you a start on that. So first things first, what is an ICO? An ICO is an initial coin offering. It's a fundraising mechanism in which new projects sell their underlying crypto tokens in exchange for Bitcoin and Ethereum. So what does this mean? Okay, you have a new project out there. They are trying to make a new blockchain. They're trying to make a new app. And they will sell a large portion of their tokens to investors in order to raise capital for their team, their founders, marketing and research to build the project, to build the app, all the above. So it's basically a fundraiser where they're selling, once again, a large portion of the tokens they've created, and they use those funds to invest in the project, ultimately trying to raise the value of the project and the value of each coin thereafter. Soft cap. What is a soft cap? You'll see soft cap, you'll see hard cap. Two different terms here. A soft cap is the amount received at which the crowd sale will be considered a success. It's the minimum amount required by the project. And if they don't reach that amount during the ICO, very often they will let the investors get their money, their Ether or their Bitcoin back. Basically, a soft cap is saying, okay, we need to raise at least $2 million to get this off the ground and to move this project forward. If we can't raise $2 million, we will consider this project a failure because we simply will not have enough capital to do what we're trying to do. A lot of projects will have a certain date by which they want to reach that soft cap by. What is a hard cap? You hear this a lot. It's a pretty important term. A hard cap is basically defined as the maximum amount a crowd sale will receive. For example, take a project. They need to raise at least $2 million in their soft cap, but they want to raise a total of $10 million for their hard cap. So a hard cap is basically a project saying, hey, the most we're going to receive from the ICO is this fixed amount. We will not raise anything above that. Once we reach our hard cap, of 10 million, we are done raising and collecting funds. KYC, you'll see that a lot. It's a know your customer form. Know your customer form. It's basically the process of a business or project identifying and verifying the identity of its clients. So a lot of different projects and ICOs will make you log onto their website, fill out a couple forms with your name, your address. A lot of times you have to upload an ID. This is basically just a project confirming who you are, your residence, if your county, your country is going to let you legally invest, your age, all those different things. So just getting all your basic information, confirming everything, and making sure that you can participate in their sale. Okay, so it's a verification process. SAFT form, it's a simple agreement for future tokens. It's a document. So it's a form or paperwork used to convey rights and tokens prior to the development of the token's functionality. To summarize that term, SAF form is basically a document that most investors have to review and sign to be able to participate in the sale. It's basically a disclosure, lets them know their rights as a token holder, their rights as an investor, their liabilities, the functionality of the tokens, all that stuff. Really, when you think about it, do you want to invest in anything without getting and reviewing a contract of some sort? I know personally that I wouldn't. A lot of times you'll hear projects say they're going to do this, there's these terms, that terms, those terms. I like to look for everything that they talked about in the SAFT form. Obviously, these days you can't take everyone's word for something. A legal document is a very important thing in my opinion. Okay? Accredited investor. You'll hear that a lot in all sorts of investments. An accredited investor is a person or institution that meets certain requirements for the purpose of purchasing securities, tokens that are not offered to the general public. So with a lot of regulation, they want to protect the average investor from investing in something that he's not familiar with. So the term accredited investor is different for a lot of different countries. Some countries don't have that stipulation that you have to be an accredited investor in order to invest. Here in America, which I'm located, I believe you had to have made $200,000 the last 2 years, $300,000 each year if you're married, combined income, and then I believe it's $1 million or $1 million in assets. So it's basically saying, okay, this person, we verified them with the amount of money that they make, with their net worth. We believe them to be, obviously a sophisticated individual, and we deem them fit to be sophisticated enough to invest in projects like this. So it's more of a metric on, who can invest, who can invest. Here in America, obviously they want to make sure that accredited investors are those that show somewhat of a, I don't want to say a financial responsibility, but to be a very financially sophisticated person, so to speak. Once again, different countries have different standards, some a lot lower than here in the United States. Circulating supply. This is the amount of tokens that are currently being traded on the market. So if there's 100,000 tokens that are available on exchanges and people's wallets, these are the amount of tokens that are available right now, circulating, that could be bought and sold. Okay, total supply. So this is the total amount of tokens that are in existence, including the ones that aren't in circulation. So you may have 80 million tokens that are in circulation right now. Those could be bought and sold on open markets, exchanges, etc. And then you may have another 20 million tokens that are locked up, with team members, etc., saved for a later date. So the total supply is the total number of tokens available right now, including ones that are in circulation and not in circulation. The maximum supply of tokens tells you the number of maximum tokens that will ever be created. So let's say there's 100 million tokens right now available for a project, and over the next 10 years, they're going to release 100,000 tokens per year over a 9-year period. So basically, to summarize it again, maximum supply is how many tokens are going to be available total in the future in total existence. Once again, if there's 100 tokens available right now, and over the next 9 years, every year they're going to release 100 more, then there's going to be 1,000 total tokens as a maximum supply. You'll see the term MVP a lot. Do they have an MVP? An MVP is a minimum viable product. It's a product that has just enough features to satisfy early customers and to provide feedback for future product development. For example, let's say there is a new project, a new company that's releasing an app, and they're talking about the app. It's the next big thing. It's going to change crypto. It's going to change tech. It's going to be amazing. but you find out they haven't even started on it yet. They don't even have an example. They don't have anything out there that's currently working. So when you're going to invest in a company, in a project, in an ICO, you want to make sure that the company has an MVP, is close to finishing an MVP. Really, the goal would be to access it, to use it, to see if it works. Last thing you want to do is invest a lot of money into a project that has a great idea and they never execute on actually getting a working product out there in the space. So a project that has an MVP available and is working, very little bugs, and people seem to like it. It's a safer place to park your money because it's actually a project that, once again, is has something that's actually tangible and people can use. So, white paper, you'll hear that a lot. What's the white paper? Read the white paper. A white paper is an informational document issued by a company or project to promote or highlight the features of a solution, product, or service. To summarize that, a white paper is basically the team releasing a document stating what they're trying to do, how they differ, what the project is, the roadmap, basically everything they're trying to accomplish, everything about the product, how they're different. It's basically their way of informing the investor what they're doing, and a way of them selling the investor on why they should invest in them. So very important to read that white paper. Obviously, you want to make sure you know and understand what you're investing in and get an idea of what they're trying to get done. Okay, what is an airdrop? So when a project offers up some of its tokens or coins to the crypto community for free, or in return of a completion of small, simple tasks. For one, it draws attention to a project when it would otherwise have not been received. Secondly, it forms a foundation of early adopters, people who are invested personally in the project and thus have an inherent loyalty to its success. So, okay, a lot of information, summarize it. Okay, you have a project out there. Let's say they're in their private sale. They're being very picky on who they're letting invest. Let's say they already have their 20 different investors that have taken up all their tokens, and that's the only money they're going to raise. Well, it's hard to build a community when you only have 20 people that have your tokens, when they have your coins. You want as many people as possible out there in the crypto community to have skin in the game, to have a piece of the action. So a lot of times, you'll get a couple thousand people that'll register for the sale of an ICO, and they may only sell to, once again, 20 to 100 people. So instead of shunning out those extra couple thousand people, couple hundred people, and giving them nothing, a lot of projects like to give them a few coins, a few tokens, give them a little bit of, taste, a little piece of the pie, let them get some skin in the game, and engage a larger community by giving thousands of people, even if it's a small amount of tokens. It's better to give and have thousands of people have skin in the game in your project than only 20 to 100 different people that have your coins and tokens. So it's a way of spreading themselves out there. Okay, an advisor. What is an advisor? An advisor is important. It's a simple definition. It's a person who gives advice, typically someone who is an expert in the field. In crypto, what you'll do is you'll go to the homepage of a project. You'll see who the team is, and you'll see who the advisors are. An advisor is basically someone who, for lack of a better term, is on the board of directors, so to speak. A company may have 10 employees, 2 founders, and then have an extra 4 to 5 people, maybe even 10 people that work as advisors. They help them with marketing. They help them, raise money in their sale, give them advice. Having a trusted advisor in an ICO's corner can be important because a lot of these projects are finance guys, they're tech guys, and it definitely makes it worth their while to add someone in the industry that has experience that can help them grow their project. So once again, I'm going to include some links in the description box so you can look up some of these terms on your own. These are the best definitions that I could find for these specific terms. I'm going to make a follow-up video on why a lot of these are important and what ICO investors typically look for. But here's some good basic definitions. Understand these and you'll have a great understanding on what they're talking about when you're looking at ICO reviews and projects. And I wish you guys luck out there. Thanks for watching.